Hello, everyone, and welcome to tonight's session of Trade Finder Live. My name is Zach. I'm one of the team here at Elliott Wave Options, and I'll be facilitating this session tonight with Rob Roy. I'll get out of the way here after we go through some housekeeping details and introduce Rob for the presentation we're all here for. Market made a reversal today, rallied up a bit, so I'm interested to hear Rob's thoughts on his general market analysis. We have the live disclosure disclaimer visible here. If you've attended any of our live sessions previously, then you've seen this. The main thing to take away from it is that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice. We do have this available on our website to be read in full detail there, or feel free to take a screenshot if you like, but that's the main point to take away. So for this session, we only have one method of asking questions, and that's going to be to the Q&A window. So at any point throughout the session, please feel encouraged to write your question into that window. Just keep in mind that we are streaming to multiple live platforms along with our Zoom audience. We have YouTube, Facebook, and Twitter. So we'll have questions coming in from all of those different platforms. The question portion is brief at the end. We're going to open it up to a few questions after Rob goes through his general market analysis and then looks for some case study considerations. And then with the time remaining, we'll open it up to a few questions that are available. So again, if we don't get to your question, just know it has nothing to do with the validity. We just only have so much time. Also take that as encouragement to attend the insiders meeting when there's a 45-minute portion solely based on answering questions for subscribers. So obviously a much higher likelihood of getting your question addressed there. Lastly, we have the chat window as well. So any support related queries I can handle in there, or for any interaction amongst other attendees, please feel encouraged to use that window. Just make note that at the bottom, it says to hosts and panelists as a default. Make sure to change that to everyone. That way your message will be visible to everyone on the webinar. Alrighty, that covers off all the important stuff. So I'll get out of the way, introduce the man of the hour, and that's Rob Roy.
Hi, everyone. Thanks, Zach. I hope you've enjoyed a wonderful holiday weekend with your family, friends, and loved ones. If you didn't have a chance to look at it, we did a special live stream for our normal YouTube SPY update over the weekend. I wanted to thank everybody for all the happy birthday wishes. Very much appreciated. If you haven't been there, visit our channel on YouTube, Elliott Wave Options, where we post every week an update of not just the US market, but the international markets, which leads me into Trade Finder. If this is your first time joining us, and welcome to everyone from the live streaming services that Zach mentioned. We will talk about not just the US market, but international markets as well. I invite you, if you're only interested in trading the US market, not to tune out when we look at international markets, because there's a lot of patterns that are greater in international markets, and every security that we look at that's concerning international markets is tradable on the US exchanges. And then we'll go through and look at any case study alerts for our alert subscribers at Elliott Wave Options that we have closed since last week, since the last time we talked. Give you an idea of how our alert service works. Then we'll go through the case study considerations for previous trade finders. We'll look and see if we can find a new one tonight. And with whatever time's left, we'll open it up to the general Q&A, and Zach gave you an idea of how to ask your questions. So with that, let's go ahead and take a look at the market. We did have a reversal, as Zach mentioned in the intro. We were trading to the downside. The futures were crazy yesterday. I don't know if you happened to see them. They were all over the place, from up big to down big. And in the end, we opened a bit lower, traded lower, and then just rallied into the close. And you can see by this bar, we closed on the high of the day. So just a rally right there to the closing high. And then you look at the 10-day moving average, and really nothing's happened in a week. Nothing has really happened since the last time we talked. Every day, the last 5 bars has touched the 10-day moving average. So we're just sitting right there, and notice the 10-day moving average has gone dead sideways right here at this important 380 level that we talked about as importance last weekend and in the SPY update that we did Friday night. Just sitting here, there is still some separation between the 10 and the 50-day moving average. That will close at some point. Whether it does it sooner rather than later remains to be seen, but that will get closed. And then we take a look at the Elliott wave pattern, and you can see that we did break this tap box, but it's still there. So it hasn't disappeared. There's still a possibility that we make a new low down there in the 350 area The question again becomes, do we move higher first? Well, I thought the question was, which of these gaps gets filled first? We mentioned last week that we had 2 gaps to the downside, 2 gaps to the upside. Which ones get filled first? Well, they filled one of the downside gaps and one of the upside gaps. So nothing has changed from that standpoint since last week. So we can come back, rally back up towards that wave 4, close this gap and still turn and make a new wave 5 low, or we can move lower first and move back to the upside. So basically, this is like a recording from last week with the fact that we haven't gone anywhere since we talked last week. We're still sitting right at that same spot at 380. So none of those questions have been answered yet. We'll just have to wait and see which direction the market wants to go. Now, some keys that we can look at, and here's one that I think might be giving us a little bit of an idea. I was pretty surprised at the rally into the close today because look at what's going on with interest rates. Here's the TNX, the 10-year, and note that interest rates continue to move to the downside in the face of the Federal Reserve raising rates. And we know the Federal Reserve is going to continue to raise rates. The only reason that the Federal Reserve may not continue to raise rates past where we already think is severe economic weakness. Now, if we were going to have severe economic weakness, you wouldn't expect the dollar to do that. So the strength of the dollar, I did mention this last week, that what happens with this breakout of the dollar was going to have a lot to do with what occurs in the metal space. That if we broke to the upside, not good for the metals. We break to the downside, perhaps we could get a rally. We even use GLD, which I'll talk about in a little bit, as one of our case study considerations last week. So we'll go back and review that. But certainly not a downside breakout of this triangle, a big upward move on the dollar. And when you have inflation and when you have rising rates, that is supportive of the dollar. What's not supportive of the dollar is economic weakness. There's debate about whether or not we're going to have an official recession. We covered this in the SPY update as well. The Atlanta Fed has this thing called the Atlanta Fed GDP Watch, and it looks at where the GDP might be. It went from being up 1% to flat to down 1%, where it stands now for the second quarter GDP, which is released, I believe, on July 28th. And that'll tell us the official GDP reading for the second quarter of 2022. So do we officially get a recession or not? We'll know then. Regardless, the dollar is not looking at some severe economic weakness. Even if we go into an official recession, the dollar is not showing us that that's going to be severe. If we were to lose the dollar and we have interest rates moving to the upside and inflation trying to be wrestled into control, that would be a pretty dire forecast for the markets, that old stagflation word. But we're not there, not with that kind of a move today in the dollar. So going back, interest rates moving to the downside is telling you money is coming out of the equities market and moving into the bond market, because with the Federal Reserve raising rates would be going up. Now, the markets all look, including the bond market, 6 to 9 months down the road. So could you look at that and say, all right, well, 6 to 9 months down the road, the Federal Reserve may be lowering rates? It's a possibility. And there's speculation that before next year ends, the Federal Reserve will have flipped and will be back to lowering rates. But is it that soon that we're looking ahead 6 to 9 months? I don't think so. I think it has to do more with money is coming out of the equities market and moving into the bond market. Certainly not enough to derail a rally back to the upside today. And when you see that, you have a reversal like this, you want to see what was the volume. Not even average volume. So can you put a lot of weight into it? No. If we would have had average or above average volume with a lower open, trading lower, and then a rally to the close, we would have said, hey, maybe more to the upside. The only positive that I can see is, number one, I should say positives because there's two of them. One, we did close above 380 today. But if you've listened to any of my recordings, you know that doesn't mean anything. You have to have a second day of follow through or confirmation day. So tomorrow really matters. Can we follow through and have a higher close tomorrow? At the time of this recording, the futures are up 11 3/4. Maybe we may have follow through tomorrow. We'll have to wait and see. And the fact that there is still pretty good separation between the 10 and the 50-day moving averages, meaning that from that standpoint, we're still a little bit oversold. So those are the two best things going for the market. Pretty much everything else is a negative, especially this downward move. Now, one thing you can look at is say, well, hey, isn't that a zigzag to the downside? And you would be right. And look where we went. We had a 50% B wave correction and a 100% extension. So is that the end of money moving into the bond market? There's a potential positive for the equities market. If that's it, and we're going to stop right here on interest rates going down, and interest rates are going to turn and move back to the upside, which you would think with the Federal Reserve just embarking on a rate hike campaign, then that could be a reversal. So perhaps there's a little bit of a head fake going on with money moving into the bond market to concern some equities traders, and then all of a sudden there's a rush back. That's just pure speculation on my part. We'll wait and see if that's how it plays out. It's a possibility, though, especially when you see we're at the 100% extension for this downward move and just a really classic. Look at this. This is just Elliott wave spot on. The 5 wave, and this is interest rates. This isn't even the equities market. The wave 5 right at the 38% Fibonacci resistance level. And then we move into a zigzag pattern on the corrective move back to the previous 4. The C wave goes to 100%. You can't draw up Elliott wave any better than this, the evidence here in the TNX. So for those of you that may be newer watching us or just finding us, we have people on our videos all the time. Hey, glad you found us. We're glad you did too. We're happy to have you come along and listen in. Hopefully we can inform you on some things. It's our goal to make your time you devote to us worthwhile. So we'll see with this move to the downside here. And my point was, to finish the point, was that if you're newer to Elliott wave, man, when you see stuff like that, how can you ignore the power of Elliott wave for a forecasting tool? I want to go back to the dollar one more time and just say, man, that was a big sprint to the upside. That move today is about what you would expect out of the width of this triangle. When you have a corrective triangle, the breakout is roughly the percentage of the mouth of the triangle. We look for 80% of that in our strangles. We have a volatility portfolio that just focuses on these triangles. And so when we see those breakouts, just to kind of catch the greatest part of the IV spikes, we look for 80% of the move rather than 100%. But the general rule is the move will eventually be 100%. Sometimes that last 20% is more of a crawl than a vertical move, a la what the dollar did today. And so we try to capture that volatility spike, not necessarily the entire 100% of the move, if that makes sense. So pretty impressive move in the dollar. Hard to imagine we don't go up and hit that wave 5 target now in the dollar. Now, when you look at the wave 4, this is where it could get really interesting longer term over the dollar. Elliott, this is the 23.6% fib corrective level. Elliott noted that, and he said it's legit. He was a big Fibonacci fan. He felt Fibonacci really worked in well with his Elliott wave algorithm, but he really wanted a 38.2% corrective move to feel like it was really a correction. He would view sometimes the 23.6% move as a blip down in a continuing impulse move. In other words, it wouldn't surprise Elliott if this 5 here relabels to a 3 at some point in the dollar. So it's not done that yet. But based on the fact that this wave 4 is only 23.6% and the big sprint to the upside here that looks more like action in a wave 3 than 5, perhaps this does relabel. Again, speculation on my part. I'm not smarter than that Elliott wave algorithm. I just pretty good at reading the charts, and that's where we leave things. All right, so that's taking a look at our market. I showed you volume. Where do we go from here? I know that's what everybody wants to look at, and I still say that tomorrow matters a lot. If we break back below 380 and close below 380, that could perhaps mean a move down to this new wave 5 low. I think that there's a case to be made for a move back to the upside, likely come up and fill this gap, even test that wave 4 potentially before rolling over to a new wave 5 low. I'm sorry, either one of the two scenarios is viable. And I know you guys don't like it when I say that. You're like, oh, you're covering both sides. Sometimes the market requires you to be patient and let the charts play out, let the patterns play out, and then you jump in with both feet. We're just dipping our toes in the water here and there right now when we see a really good setup or a really good pattern, but not aggressive by any way, shape, or form in the markets right now, because you're just guessing. When you have two viable patterns, one to the upside and one to the downside, it's a guess as far as which one. Flip a coin would be is appropriate. Let the pattern set itself up, and that's when you jump in and you come in with larger positions, more positions, and be more aggressive from the trading world. There's plenty of time. When you have this sideways stuff like this, just let it do its thing. Let it play out. Be patient. It'll come back to us at some point in time. All right, so that's that. Now let's go ahead and take a look at some more of the international markets. Well, let's look at our markets first, and then we'll head to the international markets. But the diamonds back to 310 again. So sitting right here, dead on that 310 level. Didn't get the rally back to the upside there on the DIA like we did on the spiders. So kind of a little bit different there. They've been in lockstep here over the past month or so. Little separation there, but not by much, just a small amount. But the key difference here is that we had broken above the 310 level, and we did not get a follow through day today. So Friday's close above 310, no follow through day today. That's showing a bit more weakness in the Dow, the diamonds at least, than we had in the SPY. So obviously we want to look at the Qs, and then we'll look at the IWM after that. Pretty nice move to the upside. There was a period of time today when both the Dow and the S&P were down significantly and the NASDAQ was up. And we've kind of chatted about this with the Qs and the NASDAQ underperforming so much so far this year, down, well, not nearly, almost twice, but not quite twice what the SPY is, 21% versus 34%. So give you a percentage there difference on the move to the downside. Could it be the Qs lead us back out of this? Well, that was a pretty strong move to the upside today. You look at volume, better volume than we had on the SPY, but still not average volume. So what does that tell us? That perhaps we're going to come up and really fully fill this gap? I think that this is just short-term rotation of money looking to find where the oversold sectors, where the oversold stocks, the stocks that have underperformed the rest of the market, knowing that the markets performed poorly for the entire year. But what's worse, where could we likely get a bounce sooner rather than later? And I think that's the Qs. I don't think it lasts though. Historically, tech stocks do not perform well when rates are going up, though. So this could be just a trading move here, a monetary rotation, short-term rotation of money into a sector that's been beaten down so significantly, and looking for where's the best bang for the buck on a bounce back to the upside. The Qs make a lot of sense in that scenario. A positive here that you could see is that we've made a little bit of a pattern here for a potential uptrend. How long it lasts remains to be seen. Did close above the 10-day moving average, and that 10-day moving average is kind of trying to turn its way back up towards the 50. Note where the 50-day moving average is. You could have that 10-day go up, hit that 50-day moving average, and get that gap close there, the first downside gap in the Qs. And I think you could see what would finish playing out in this pattern is this ascending triangle. Then we would have something really significant to talk about. Having a great looking triangle like that on the Qs, something big's about to happen. We're a ways away from that now. Just saying that you're starting to see the beginnings of it. Be something to watch moving forward. Be really interesting to see how it plays out. Let's look at the IWM. So the small caps did give us a follow through. So you can see that close there on Friday above 170. We talked about this in that live stream update that we did Friday night as well. A follow through confirmation back to the upside here. So the IWM is really wanting to make a run back towards 190 to come up here, test that area that's now resistance, and get those other gaps closed. So you're looking at, well, the IWM was never as poor as the Qs, but you're seeing two of the markets that had been in a bit of malaise in the IWM, significantly underperforming in the Qs, both of those having pretty decent days today. So could that be areas that give us at least some sort of a oversold short-term rally back to the upside? Not quite as much separation between the 10 and the 50-day moving averages, but it tends to work that way on the IWM. They don't separate quite as far. You don't get the extremes of overbought, oversold conditions with the separation between the 10 and the 50 on the IWM. All right, let's look at Bitcoin. And we had talked about the significance of the break below 20,000. Well, that was short-lived. Look at that, back above 20,000 now. So can it hold it? It's going to try. Can it hold it? Maybe we have a little bit more of a bounce then. We do have a wave 5 at 61.8%. So it's trying to bounce from that level. If you've listened to these recordings of all the Fibonacci levels, 61.8% I feel is the strongest of all Fibonacci levels. And so we did extend there on the wave 5, and we kind of tested it and gave no follow through further to the downside. Friday, we got back up to it. And then now here we are back above that 20,000 level. So can it stay there? Can it hold it? If so, then maybe we have a little bit more of a bounce. The best thing going for Bitcoin is this extreme separation between the 10 and the 50-day moving average. We are quite a bit oversold here. So can we bounce further? I think we can. Is it going to be short-lived? Likely, but we'll find out because that Fibonacci level there on the wave 5 is pretty strong. So if it bounces back to the upside, it's going to have to reverse and deal with that again on the downside, and it would be some significant weakness to break below that. I'd heard some forecasts that people were looking for Bitcoin to move down between 12 and 15,000. I don't really know what analysis they're using to get that levels or get those levels, but that's what's been on the financial networks. So far, the charts are showing that, hey, we've held that fib level. We've got some separation here between the 10 and the 50-day. That's what I can tell you there. And it was very key to close back above 20,000. Can it hold it? Will be determining, in my opinion, where Bitcoin and some of the other cryptos go in the near term. All right, let's look at the EWA in Australia, trying to give a bounce back after a kind of a little bit of a scary attempt at a break here of 21. Note we traded below it here on the 30th, back above it, traded below it again on July 1st, back above it, but we didn't get back above it today. And even though getting to the highs of the day, that still looks good, it needs to get back above 21. A further close, another close below 21, and this could have some ranges from resource standpoint dealing with the strength of the US dollar. Notice that 10-day moving average moving down again. That's not a positive sign for the Aussie market. The positive being we're starting to get some pretty good separation here. And the reason that I note that is just here, look at the charts. I don't want you to take my word for it. Go back and look at the charts. Anytime these two start to separate, like you get a little bit of separation here, boom, back towards it. Separation here, back to the 50-day moving average. Works the same if the separation's to the upside. When they start to separate, comes back down. Separate lower, back to the 50-day moving average. This stuff matters historically. So you're seeing that's a pretty extreme difference there, especially with the 10-day moving average looking like it's rolling over. Is it for real, or is that a head fake? Is the dollar going to continue to fire to the upside? If so, I think this may be a tough time. for the Aussie to continue to see if it can move lower. But if the dollar is like, okay, we had the breakout and now we're going to come back and retrace that breakout, which always happens from corrective triangles. You don't ever know exactly when, but the breakouts do get retraced. Then that can be a little bit of support and get the EWA back above 21, but it needs to get there tomorrow. Otherwise, we're looking for more weakness there. Just because the 10 and the 50 have good separation now doesn't mean that it can't get a little bit worse or last a little bit longer. But sometime in the not too distant future, that 10-day moving average is going to move back towards that 50-day. Just know, again, don't know exactly when. Look at the EWC. I know we have a lot of viewers from Canada. Thanks again for those of you watching on all the various live stream social media services. We're happy to have you. Hopefully you're enjoying the analysis so far. When we look here at 33, really important that it got back above that. See that day that we had? Open, traded much lower on the EWC, and then we're able to rally back. Still didn't close positive, but we're able to rally back a significant part of where we were at one point in time, and most importantly, get back above 33. So the EWC, if you're interested in the Canadian market or along the Canadian market, you need that to stay above 33 and try to make a run back to the upside. Gaps here to get closed, just like the SPY does. So, I mean, there is a rally in the future of the markets. The key again is, do we go lower first and then rally, or do we rally and go lower? I think those two are both highly probable. In other words, that we get a significant rally and that we have lower lows. But it's the order is where the question mark is in my mind. Looking at the INDA, so here we are with India, and man, India's looking pretty strong here, holding that 39. It just will not give up that 39 level on the INDA. So could we be mounting a bit of a launch pad blast off type of effect here? And we've got to do this a few more days to get that true launch pad effect. But the longer we stay testing that 39 level and closing above it, the greater chance there is of a bit of a break to the upside on INDA. So you might want to watch that one pretty closely. The EWG for Germany, yeah, just what do you say? It just, every time they try, it just gets ugly again. We're starting to separate again from the 10 and the 50-day. See what happened last time that occurred? Here we rallied back towards it. Here we rallied all the way up to it. But whether or not it actually touches it or just rallies back to it, it still closes this wide gap anytime there's big separation between the 10 and the 50-day moving average. That's just a trading rule. Now we're starting to see it get a bit significant again. So can we get an oversold bounce here? Do we go lower first? You could certainly go lower in that wave 3. At some point in time, it's highly probable that the EWG gets down to 19.5. So it looks like that's where we're going. Whether or not we can rally first or not, we'll see. And I had mentioned in the weekend report that a place that, hey, was looking kind of interesting right now, if you wanted to look for a place to go long, perhaps the FXI. China, they're coming out of their lockdown. The government has backed off. They're opening up their travel restrictions so that it's easier to come in. Commerce will be easier for China. So it might be an area to take a shot at something a bit on the longer side. The key here for the FXI is it needs to hold 33 as well. So if it breaks down below that, well, then anywhere between 33 and 28 could be a problem. We'd have a little bit of support resistance there, a little bit there, and significant all the way back down to 28. So as long as it stays above 33, I think you could take a shot being long the FXI. It might be one of the better places to look for a long trade, other than maybe the Qs if we can continue to bounce. Now, the futures have given up a lot of their gains since we started. We're up only 3.25 now. So down significantly from when we just started. But Speaking of the FXI, we need to hold that level. All right, so those are some of the international markets. If there's something else you wanted to look at, we can get to that in the Q&A. Right now, what I wanted to share with you is a little bit of analysis of a new alert that we sent out today for our alert subscribers, rather than showing you a closed one, which I could show you another closed alert. But at this point in time, I want to show you, get the magnifier off, this new one, because the chart's pretty interesting here on KSS. So this showed up in our time strategy, which is our AI-based strategy. You may have seen some of our thumbnails talking about AI being infused into technical analysis. We've already done that. We have AI programmers that are also traders that have created this strategy for us. And it shows up, and then we have varying different types of strategies to take advantage of when the pattern gives us a setup and the AI gives us a score that's acceptable. We look for calendars, butterflies, or diagonals, either debit or credit diagonals. In this case, it's a debit diagonal. And you take a look at the chart, and I'm going to go from here and go back to the regular screen and show you this in a second, but check this out. So here was the big drop. Those little E's are earnings reports. So this was not an earnings report drop. This was, there had been speculation about Kohl's being sold, and they've backed out of those talks. And so that's what sent the stock to the downside, 20% here. And so you look at that and you say, okay, well, where do we go from here? Well, also we have a very qualified zigzag pattern with the B wave right around 61.8%. and the C wave extending down to 25, the 100% extension, which is where you think it would go, down to 25. So what we like to do is set up strategies where we can capture time decay, and then we can capture a slight directional move if warranted, but it's not necessarily a directional strategy. It's more on the sideways type scenario. But one other thing that I wanted to show you when we start talking about Kohl's, let's bring that up, the chart of KSS. You go back a ways, and I'm going to condense this a lot, so it's going to get a little bit bunched up for you, but I want to go back far enough to where you can see the other part of the support that exists at this 25 level. So if we could get, it could be okay if it moved down quicker. Would prefer it to drift down to 25 so that we can capture some time decay as well. But since we're slightly directional on this diagonal spread, if it moves quicker, hey, we can still make a gain. But closing this down, look at that. Going back to, this is 2020, but look how significant 25 was back then. Boom, boom, boom. A major point of resistance for 6 months going back to 2020. And then, so here we are with these bars just kind of floating in the middle of nowhere there, around 27.5 to 30. We've got a zigzag that says we're likely going to 25, and we've got massive support at 25. It would be quite surprising if Kohl's doesn't drift down to 25. Could it bounce first? Of course. We've got some pretty good separation with the 10-day moving average. No security in any time frame. Is very far away from the 10-day moving average. Another market rule to follow. So could it drift a little higher first? It could, but is it eventually coming down to 25? Looks that way. And so we'll see how that plays out. But I thought I would just show you a new alert setup that was sent out to our subscribers. If you're wondering, well, what's this alert service stuff mean? We offer it at ewotrader.com. When we do these trade finders, we look for case study considerations, which are trade ideas, but then you're left on your own to figure out what to do with them. Our alert service, we send out entry signals, any adjustments, and exit signals. So we kind of take you by the hand and lead you through the entire trade. So that's the difference, again, if you're wondering what it might be. So let's see if we get a little bit of a drift down there towards 25, even if we bounce a little bit higher first, not concerned with that. But pretty interesting, especially with where we're often doing either purely horizontal calendars or butterflies, and in this case, just a slight directional bias to the downside using that put debit diagonal. All right, let's go back and review a few of, well, there's only a few left of our past case study considerations. The overwhelming majority of them, have been closed for gains. As you know, that last week we scratched off VEV that we looked at on the 21st of June. That was great. Exploded to the upside. Really quick profit. Some of you posted on YouTube that you followed that one and did well. So here's where we looked at Reliance Steel. This is back to May 3rd. And we did send this out to our alert subscribers, but we adjusted it to a downside trade. And you can see that that adjustment to the downside is working out pretty well. We actually got oversold on the low today, rallied back up. The high did not touch the 10-day moving average. And as long as the dollar has any sort of strength to it, it's going to be difficult for anything in that space. We looked at HZO back on 5/17. We sent this out to our alert subscribers. We did not adjust this to the downside, and a really big bounce back to the upside today. We're almost back into where we were when this alert was sent out. So a big recovery day today. Let's see if we can get some follow through there. Mosaic was another one that we looked at here at Trade Finder. We sent this one out as an alert to our subscribers. Also adjusted this one to the downside. So we made an adjustment. Instead of looking for an upward move to the downside, you got to follow the pattern. If the pattern changes or relabels, you got to follow along with it. And you can see this wave 4 here now is at 71%. If it gets much lower, if it passes 78.6, then this entire impulse pattern, this 5-wave pattern becomes nullified, disqualified, if you want to use the correct terminology, and we continue lower on Mosaic. It certainly looks like Mosaic wants to come and at least test 40. At that point, we will relook at it and see what the likelihood is of a breaking 40 and perhaps going a little bit lower, maybe down here towards 35 would be the next stop if it decided that it couldn't hold 40, but we got to get to 40 first. But pretty nice move to the downside there, especially for the adjustment. Now, Rio, we looked at and talked about how, hey, you probably want to adjust this one downside. We did not send this one out as an alert to our alert subscribers, but we would have adjusted this to the downside if we had, along with everything else metal related. And then you can see, boom, right there. And then there you go with the 23.6% fib level. We're likely coming down here to 61.8, but is Elliot's view that that's not even much of a correction? We can probably still in a big impulse. Where does that go? You know, if it breaks past 53, then you have to start looking all the way down to 46. But again, I think that's going to have a lot to do with what goes on with the US dollar. Now, last week, we looked at GLD, and in the notes, I have notes right here that we wrote last week. If we got a follow through close below 170, we're going to 165. So here's what happened. There's the follow through close below 170, and there we go. 165. Exactly what we said was going to happen happened. So we're going to go ahead and cross that off. There probably is more downside to GLD if the dollar remains strong. If the dollar tries to rebound, then we could get a move back to the upside. But that is spot on with the notes that I wrote down from last week. Couldn't have called that one any better. And then we also looked at the XRT. It was looking for retail ETF. And then it was sent in that, hey, look at the XRT for a good retail ETF. So that's where we were. So we were closed at 61.19, and we got all the way down to a low of 57.35. So that was a 4-point drop, not quite the 10% that we're looking for. Bit of a bounce today with the market. Is it all clear for the retail sector? I don't think so. The wave 5 is at 113% extension. I think we just got an oversold bounce today, because if you go back, we walk that back just one more day, you can see the separation that occurred Friday from where we were in the 10-day moving average. So what we did today was simply go and correct that move. Now, if we can get back above 65, it is impressive that we closed above 60, But if we could get back above 65, we'd have to relook at that one and say, hey, maybe that one has some more legs to the upside. But it's got to get there first. And so far, again, today only showed us a recovery of an oversold scenario. All right, so that gives you an idea of our past case study consideration. We just only have a couple of them. And then I've shared with you what we've done for our alert subscribers when the patterns adjusted, we adjusted with them. Let's go ahead and see if we can find a case study consideration for tonight, and then we'll take a few questions here. So if you're not familiar with this software, it's called Profit Source. You can find out more about it at hubb.com. To me, it's the best Elliott Wave software on the market. I can tell you all the bells and whistles and all the cool things that it does, but if you're interested in trading Elliott Wave, I think this is what you want to look at. I've tried all the Elliott Wave softwares that I know to exist, and this is the best one. Again, I don't like to say I've tried them all because there may be some that I don't know, but I do know this, that this one, Profit Source, is programmed directly from Ralph Nelson Elliott's mathematical algorithm. It is not programmed from anybody else's own personal adaptation of Elliott Wave. And I like that personally. That's just my personal view. All right. So when you see this Elliott Wave options here, you're wondering why was you guys own it? No, the Hub organization owns the software. However, perhaps because I use it, a lot of our subscribers at Elliott Wave Options use it. And so the folks at Hub said, hey, we'll go ahead and set up a lot of pre-computed scans. If you're an Elliott Wave Options subscriber and you own the software, then you can take advantage of these pre-computed searches. And any of the ones that say EWO on them, those are my personal searches. So our subscribers actually get to see the same thing I look at each and every day when I'm going through looking for stocks for a potential alert. So when we look at this, the first thing that comes to my mind is, wow, there's 5 just after one day where we just got this rally day today. We've got 5 that are in good impulse patterns already. O'Reilly Automotive, Dollar General, that one's been on there for a while. So let's take a look at that one real quick. So we had captured this move here to the upside. Now it's consolidated it. And maybe we want to start looking at this again as far as a potential move higher. So we talked about that, and here we are consolidating. Look at the Elliott Wave pattern. It's not in a 5-wave pattern. It's in a corrective pattern where it's broken out of this little triangle here. Right there, and then moved up. Wasn't really a triangle here, but it went through consolidation. So I wouldn't look at that as a triangle, but it's trying to break again. And with this close above 250, it certainly looks like we're going up to 260. That looks like the next stop is we're going to test all-time highs, which certainly does make sense from some economic weakness. Although again, the dollar's not showing significant economic weakness, just a little bit here. All right. So that one looks kind of interesting. Let's see what the DMI shows. Looks like we're setting up for another run. That looks really good. Look at O'Reilly Auto Parts. I want to see what the liquidity looks like in those options. This is a really high price stock like AutoZone, et cetera. Those ones that they don't ever split the stock and they run like crazy. And we see this one is a watch list, and that's because the ADX hasn't broken above 20 yet. It has broken above the negative directional indicator, but it's got to get above 20 and then create separation there. That's when it starts to become interesting. And right now, I would just keep an eye on it and see 2 things. One, if it can break and follow through, it already broke above it. If it can follow through above 640 tomorrow, and we get that ADX to break above 20, I think that looks really good. So that's going to go on the watch list, ORLY. And I thought I would share with you MRCY because we had put that one on the watch list. That's shown up on the search multiple times, and we were kind of waiting to see if that one was going to trigger with the DMI. And you can see it just hasn't yet. It's trying to get up there. There is good separation between the 2 directional indicators, but the ADX just will not break above 20. Look at that. Whoop, nope, nope. It just will not confirm any strength in any of these moves. So every time it tries to make a blip, it comes down. And that's because the ADX is not confirming a trending move. Will it this time? Well, I don't know. That's a pretty interesting looking doji that we have on the chart from today. So maybe, maybe not. But that's been on the watch list. I still look at it every day. That's what I do with the watch list. So I just want to go ahead and share that one with you. So now O'Reilly goes on the list, and we'll look at that one every day as well. SEM, Select Medical Holdings, Monster Beverage looks interesting there. We'll see what that looks like. Wow, this looks like it's really trying to break out, doesn't it? Above 25 there. We got up to it on Friday, broke above it today. Volume, that's what the kind of volume you want. Average volume on the bottom chart there. And the ADX just isn't quite above 20 yet. And you're like, look at that chart. That ADX is going to get above 20. Well, I just showed you MRCY where it kept looking like it was going to, and it didn't. So we've got to let that one trigger too. So we could put that on the watch list. It's kind of interesting with the fact that it's made a clean break above 25 today on just above average volume. That's the kind of scenario that could lead to a run back up and maybe test this area here around 29, at least 28, which is the lower part of that congestion there. But we'll look and see if we get follow through out of that tomorrow. Wouldn't want to do anything with that one today. So the CBOE, if some of you are looking for, well, just forget individual stocks. Let's just look to trade the exchanges where all the activity is. There's a case to be made for that. This is in a 5-wave downward impulse pattern, he tried to say, but look at the DMI. The DMI is suggesting that, hey, you know what? Perhaps this pattern gets changed and we disqualify this downward impulse pattern. We look to move back to the upside. We're not there yet, but if that ADX could get above 20, that could very well happen. So let's see how that plays out over the next couple of trading days. So this is making more sense. If you remember when I just looked at this, it's like, wow, 5 on the impulse already after one day. Well, now you're seeing they're just triggering for the watch list, but not really triggering for trades yet. Other than Dollar General looks the best. We'll take a look at Monster. We'll make a choice, and then we'll go to some questions. Looking at the DMI here, and you can see that we broke above 96, which was really important. Turn the LA wave on, and that is a 5-wave extension to the upside, but we're awfully, gosh, the wave 4 only retraced 38.2%, which means you look for a 61.8% extension. And if it breaks that, the extended C wave is 100%. We're almost there. And we're right kind of here looking at this area of massive congestion right in that 100 area. It would be, if this could break above 100, we could have something really significantly to the upside here, really significant to the upside on Monster Beverage if it could get above 100. But there's way too much congestion between here and 100 for me. Looking at those charts, it's very interesting that the ADX is breaking above 20, and we have this separation between the two directional indicators. So if we could break above that area, that could be something to really watch. So I am going to put that on a watch list, but it's got to get above 100. And if it gets above 100 with that confirming ADX, then that could be a really nice trade. That could be off and running. It's a beverage, energy drink, as you know, bit of a defensive type sector. So, you know, all those things come into play. Let's see how that one works out. So what we're going to do now is select Dollar General is going to be our case study consideration for tonight, and looking for that one to go back, continue back to the upside towards 260. And then we'll see what happens once that gets to that point. You know, I might be thinking, well, that's not a 10% move. No, but there's going to be resistance there at 260. So if we can get a little bit of a gain and then reevaluate, where are we What do the technicals look like when we get to 260? Perhaps we would stay and continue to move to the upside, or maybe that would be a point to take profits. We'll see what that one looks like next week. All right, with that, Zach, let's take some questions.
Sounds great. Thanks for the presentation, Rob. And I understand it's your birthday, so just wanted to wish you a happy birthday. You also got some birthday wishes in the chat, so just wanted to make sure I passed those through.
Oh, thanks, everybody. Appreciate it very much.
So we'll start out with Yo2131 from YouTube. Says, love this channel. Can you do a video or talk about NXTP? It's way under book value. Insider and institutional buyers are buying heavily. Not familiar with NXTP, or maybe NXT. Oh, okay, it's Next Play.
Yeah. Yeah, this is would have been one that we used to talk about as far as the meme stock days, the very low dollar ones. And we've looked at this one before. What's really interesting about this pattern to me is this triangle right here. You're seeing some better intraday volume here. So it's attracting at least day trading type of movements. And to me, it'd be hard to go, if it's trading below book, that's super interesting in a triangle. If it breaks above this or breaks to the upside out of this triangle and can get above 50 cents, then you might have something really significant there. Probably goes, so there's 50 cents. If it gets above that, it doesn't have much in the way there. A few blips here and there. A big gap up at, it could make a run back towards $2 if it can get above 50 cents. So I would watch to see. That's just my personal opinion. You could be very aggressive on the breakout of the triangle. If it broke to the upside and it hadn't broken 50 cents yet, you can make an aggressive move. If it breaks above 50 cents, then I think you've got more room to the upside, potentially as high as $2. But I need to see that first for me personally, is the breakout of the triangle and break above 50 cents. We kind of toyed around down here below 25 cents for a bit. It's caught a little bit of interest. If we take a look at volume, better volume here lately, but still some volume that comes in on the sell side. Once you hit 50 cents, you get a break above 50 cents and those shorts are going to have to cover. You could have something significant there. So that's the way I see that one.
Very well. Thanks, Rob. We'll move back over to Zoom. There's been a couple of requests for Roblox from George and MD.
Okay, let's take a look at it. Pretty nice breakout move today. I can see why it got some interest today. We've been kind of floundering around this 25 to 35 range since mid-April. Now the key here is, can it break above 40? So getting out of, and I want to say, oh, well, it broke out of this range. Now it's got to break out of that one. I'm not saying that. That's an impressive breakout move from this trading range that it's been in, again, since mid-April. So not trying to take anything away from today's move. But again, I like the follow through confirmation day. We have a positive 1030 cross there. That 1030, the 10-day moving average is the lime green line. The 30 is the fuchsia. So that looks good. Can it break above that 40 level with that positive move? Potentially. The DMI is setting up really nice. Perhaps that's why the question was asked. Knowing how much I like the DMI, you can see the ADX breaking above 20, massive separation between those two directional indicators. That's telling you it is likely to give us the follow through day. Tiny bit overbought on the close. So maybe it trades a little lower at some point tomorrow, or maybe it just takes off. But I think it's going to have to negotiate this 40 level a little bit. If it does, you're pretty clear to 50. And based on that good of a DMI, that may not be the end of it. You might be looking at coming up here to fill this gap. So yeah, that's pretty interesting. I just would need to see tomorrow. Can we close above 40 tomorrow? And even if we don't, even if it needs to consolidate under 40 for a couple days, I still think it bears watching and see if it can get above 40. And then again, I think you're pretty clear to 50.
Very well. Following that, Carrie and MD would also like to look at Datadog, and MD added that for my analysis, both are touched the bottom and wave 1 and 2 are completed and wave 3 started.
Are we on, is that Datadog that you're talking about, or was that the one with Roblox that I was just looking at?
MD said for both Roblox and Datadog, but yeah, the
Okay.
Datadog for Carrie and MD now.
Okay. Well, you can see here that the wave 5 finish, we don't label wave 1s. So that's just when the wave 5 ends and you move back to towards the previous 4, that can be in a corrective pattern or in a wave 1 impulse, followed by a 2 correction. Often that does start a zigzag or is started in a zigzag, but we prefer to look at the corrective patterns like a zigzag coming out of a 5 wave completion for the move back to the upside. And it looks like a pretty well formed one here. Yeah. And so looks like 120 is in play for Datadog, especially after a really, really nice move today. And here we have a potential roadblock there, 120. It's going to bump its head against it. But if it can break that, it could be back at 160 in a short period of time. But I would want to see some follow through here. If you want to be super aggressive, you could come in now. But just with today's big move, I just on this type of stuff, there is plenty of room on the move back to the upside. I think 160, as I said, could be in play, but I would want to see it close above 120 first to see how that plays out. But we could be seeing some of these 5 wave completions and rebounding back to the previous 4 with the fact that the market is a bit oversold still with that 1050 separation, and maybe we're getting some sort of a bounce back. The futures have now gone negative, but just slightly. But we'll see how tomorrow plays out. Do we get a follow through today's reversal or not? That's going to be interesting.
Yes, indeed. We shall find out. We'll transition back over to YouTube now, and Gary would like to look at Tesla.
Figured Tesla was going to be on the interest level tonight. You can see the wave 4 at 38%. But we had talked about this over the weekend. Take the moving averages off, even take the Elliott wave pattern off, and you've got a pretty nice symmetrical triangle here. It may have some room here for a continued consolidation in more towards the point of the triangle, but I've shared, I've done so much stuff with triangles. The triangle strategy that I created was kind of a claim to fame with these triangles, etc. And one of the mistakes that I made in the early days was trying to get the pattern to be too perfect. In other words, waiting and watching and saying, oh, we need a few more sideways days to get right into the point of this triangle. And then I'll put on a triangle and you see a pretty decent formation like this. And then boom, it breaks out. You try to get too cute, try to get the pattern too perfect, and you miss the breakout move after watching it for a while. That was frustrating. So I don't do that anymore. Just noting that it could happen, but it's just, if you have a large account, putting on a strangle right now on Tesla looks pretty impressive because something's going to happen with Tesla in the not too distant future. So ended up 17 points, 2.5% today. Was trading lower at one point in time, but really just down to hit this lower trend line of the higher lows. But man, that's a nice looking triangle to me. I think Tesla makes a significant move here. That's a couple 100-point move that's coming. They did, I'm sorry, Zach, just one more thought on Tesla. They disappointed on the number of vehicles that they delivered, but it was all blamed on, supply shortages, etc., not from a lack of demand. It was just they couldn't get the parts. They couldn't make cars fast enough. The demand's there. They just couldn't get the parts that they needed to make them. And so it seems like the market's forgiven that. But that was the most recent news there. Okay, go on. I know we're past 10, but let's take a couple more and then we'll wrap it up.
Sounds great. I was going to say it's always an interesting chart to look at and to analyze with all the external factors that continue to play into Tesla. So with
Sure has a bunch of them with Elon's tweets and all of his other activities. Never ends.
Absolutely. So Will from YouTube asked if you could analyze the semiconductor sector.
Okay. Let's see. SMH we'll look at. It's a good one for the semis. So, well, the first thing that you notice is this zigzag pattern here. That's pretty clean. And so when you have, call it the 38.2% V wave correction, that fib level, you look for a 61.8% extension. Well, we basically did that. So we're at an area where that zigzag has been satisfied. The question becomes, do you get an extended C wave? Does the C wave move past 61.8 and come down to 100% extension? When we see that, we usually look for our confirming indicators to help guide us there. If you know me, you know that I'm not as big a fan of the DMI on a downward move as I am on an upward move, because the DMI is technically a little bit of a lagging indicator. And so when you set up a lagging indicator, stocks can move to the downside so fast that the pattern can complete before the DMI can catch up. However, I do look at the two directional indicators even more than the ADX on a downward move. And that's telling you that the sellers have clearly been in control. But we had a reversal today and we're a bit oversold. So it looks like we want to at least bounce back to 200 here on the semis, at least on the SMH. And let's see if we can get above that, because that was also the point of this pivot point A wave low here that occurred on the 17th of June. So if we can break above 200, you're probably back to 220, meaning that this zigzag would be complete and we'd be retracing that C impulse move. But you got to watch that 200 level, because often, if you're familiar with zigzags, when you're looking to see for an extended level, you hit the level you're supposed to go to, you test the previous fib level, and then you go down to the next one. So that's still a possibility as well, which is why I say I would want to see the semis get above 200. If they can, then I think you got a pretty good trade there up to 220. So that one's pretty clean.
Absolutely.
One more?
One more sounds good. Yeah, we don't want to keep you too late on your birthday, especially since we're already over time. And there's been tons more birthday wishes from both Zoom and all our other platforms for streaming too.
Thanks, everybody. Appreciate it very much.
I'm going to make sure I pass those through to you. So there's been also numerous requests from both YouTube and Zoom to look at oil. So maybe we'll close off on that.
That's a good idea. Probably a bit shocking on oil today was to me to see this big downward move. So the thing that confuses me is oil would be a sign of economic weakness as well, right? I mean, they're all talking about where's the breaking point in the demand for oil. Is it $5 a gallon in gas? Is it $6? Most people were speculating that people could handle $5 and it would take $6. We got to $5 and then we reversed. And so moving to the downside here, this is a pretty decent zigzag pattern right there. And that would tell you that we're pretty close to the bottom of that zigzag. We move a little bit past the point. The first thing here that we want to look at is this ascending triangle that we had right there. And so breaking below that was all done in one day. We came down and we tested it. We broke back to the upside. And then here we are back down here, moving back down towards the 100% level. We are almost there. We are oversold now just in the 1 day's move. But what a big move down in oil today. So we're in the peak driving season in the summer. Perhaps it was because it passed July 4th. And then people are already starting to look to back to school stuff. And so maybe we're on the other side of the bell curve on the peak of driving season. But that was a surprising move to me, with the fact that the dollar was up so significantly today. Obviously, oil came down a la with commodities with the dollar. But what I'm focusing on more is the sign of economic weakness. Economic weakness would bring the dollar back down. You would think that with oil tanking so much that would be a sign of demand, et cetera. But it may just be that we got past July 4th. We're past the midpoint of the summer, if you will, already looking at back to school in August kind of thing. So we're oversold. That gap's probably going to get filled in the not too distant future. And then I think it gets really interesting. Could we hit 72 on the USO first? Easily tomorrow. And then perhaps we bounce back up, but we're oversold. We need to fill that gap. But man, what a surprising move in oil today. But now we find out if it can break below that 100% level, you're going back down to 64, which would feel great at the gas pumps, wouldn't it? If we got oil back down that far. I'm a little suspect of that occurring yet. I think it's too early to tell, but I have to admit today surprised me also. Right, obviously the voice on this birthday edition has had enough for tonight, but I wanted to thank everybody, especially in all the various social media services for live streaming with us tonight, our normal audience via Zoom, etc. Thanks everybody. Thank you for all the birthday wishes. Very much appreciated. As you know, I'm a big fan of the fact that when you devote your valuable time being the most valuable asset that we all have, to spending it with us, we really make it a strong intent on making it an informative and educational use of your time. That's big with me. It's not BS. I really am passionate about that. Thank you so much for your time. Hope you enjoyed tonight. Have a great week. Look forward to talking to you again next week.